In this video, we'll be having a look at Deutsche Telekom, the massive behemoth of a telecommunications company that is originated in Germany. Now, Deutsche Telekom is mostly known because of its brand of T-Mobile, which is located in several parts of the world. And for this video, we'll be having a look at their financials. And I think the first key takeaway that we'll have when we look at their financials is that their revenue and their earnings are showing very, very massive numbers. We're talking about billions of euros, 58 billion euros in 2012, which went up all the way up to over 100 billion euros in 2021. Deutsche Telekom is an absolutely massive corporation. And I think it's well within the top 10 of the biggest German companies that are out there. So let's have a look at their financials and let's see whether or not we think it's actually a good investment for the future. So looking at the revenue, what we can already see is their revenue has been increasing steadily by 7% year over year. I think it's worth noting that because it's a telecommunication company, their revenues are very much secured. People will need their internet, people will need their mobile subscriptions, people will need all of their communication, and therefore it's a very sticky revenue. So the revenue has been growing by 7%. A little side note here as well is that in 2020, because we see a big revenue spike here in 2020-2019, this is mainly because they took over Sprint, which is a telecommunications company located in the United States. Now, the majority of the revenue for Deutsche Telekom, and even though the name itself says Deutsche Telekom, only a quarter of the revenue actually originates from Germany, because about 65% of the revenue is coming from T-Mobile US, which now includes Sprint ever since 2020. In addition to that, they also have about the remaining 10% of the revenue is coming from different countries all over the world, mostly in Europe. But the majority is coming from the United States, and about 1/4 of the revenue is coming from Germany itself. Looking at the earnings, we can see that earnings have been growing from 18 billion in 2012 all the way up to 40 billion in 2021. Absolutely massive numbers. And what we see here as well, even though it's a very slight number, we can see that earnings are growing faster than their revenue is, which means that they are consolidating their business and becoming more efficient in running their machine and operating their infrastructure, even though it's a very slight level. So I think there's a lot more optimization here to be had. When we had a look at KPN, the Dutch telecom provider, a few weeks ago, the one thing that we noticed is they are very much not growing in revenue all that much, and their earnings is also not growing that much, but they're very much becoming more efficient. So their earnings is actually growing a lot faster than the revenue is, and their capital expenditures are massively decreasing as compared to their cash flow of operations, which is not quite what we see with Deutsche Telekom. So where KPN was mostly solidifying its positions and pressing costs and making sure that they can run as efficiently as possible as a way to establish free cash flow, what we see with Deutsche Telekom is they're still very much in the growth aspect of things. They're still very much into expanding their business as much as they can, and therefore I think Deutsche Telekom is more of a growth story that KPN is when we compare these two telecom companies. So their earnings have been growing 9.4% year over year, which are pretty good numbers for a telecommunications company because its business model is so solid and so stable. I think those are absolutely impressive numbers for Deutsche Telekom. But this comes at a cost. When we look at their debt level, we can see that that debt has been growing from 36 billion, already quite a high number here in 2012, all the way up to 132 billion euros in 2021. Their debt level has been growing a lot faster than their earnings has. So we can see here, especially in 2020, when they did the acquisition of Sprint, they had to loan a lot of money, borrow a lot of money. In addition to this as well, to be fair, because there was also an accounting change here in 2020, which we also saw in Deutsche Post, the German postal service, because their long-term leases, so leases of more than 5 years, also have to be included into the debt statement because it's an expense that you're going to have to be making for the upcoming few years, and therefore there was an accounting change in which companies were required to put those long-term leases as debt on their balance sheet. So the massive debt spike here of about 45 billion is not just because of the Sprint merger, but also because of the accounting change. There was a bit of a double whammy here when it comes to 2012 debt levels. But still, I think the main takeaway here is that debt level has been growing a lot faster than the earnings has, which makes it a bit risky, okay? Looking at excess cash, there is not that much to say really. They always have like a stable excess cash of about 4 billion on their balance sheet. In 2020 they had a bit more because of the acquisition and leftover money, and they borrowed some to maybe weather the storm for COVID. I'm not exactly sure, but there's not much to say here. Market cap increased by about 8.8% year over year, which is not really that much. I think on average, like I always say, the stock market returns about 10%. So this is underperforming that when it comes to market cap, but then again, they're paying out a pretty hefty dividend, so maybe that makes up for it. We'll have a look at that in a second. Enterprise value has been increasing a lot faster than the market cap has. Now, enterprise value is the entire value of the business. It is the market cap to which we add the debt and then subtract the cash. And because that debt level has been growing so exponentially in the past 10 years, we can see enterprise value growing a lot faster than market cap is. Looking at the EV/EBITDA ratio, how many years does it take for Deutsche Telekom to buy themselves back simply with their own earnings? We can see on average their numbers have always been around 4.8 times. At the lowest point was 3.9, the highest point was 5.4 here in 2017. So this is a very solid range. They always have about the same multiple here historically for the past 10 years, which is quite handy for us if we want to forecast this into the future, because those multiples are quite steady and within the similar range. Net debt to EBITDA, like I mentioned, that debt has been growing faster than earnings, so that's also what we expect to see here when it comes to their ratios. Now, I always say I want to see a business with a ratio of less than 3 times, because after 3 times, what's going to happen is that the big investment banks are going to ask a premium whenever you borrow money with them, because it's just more risky to borrow your money because you already have so much debt on your balance sheet. And this is also what we see with Deutsche Telekom. So basically what we see here is they are growing a lot, and we can see that in the revenue numbers as well. They've been growing a lot, but it's also because they're over leveraging themselves. So I think the very next step here for Deutsche Telekom is to actually solidify their current position and maybe pay down that debt a little bit, because it's really starting to get into the dangerous territory here. On average though, it's been about 2.6, which is about the maximum leverage I think that I am okay with accepting for any company. So moving away from the financials and looking into the cash flow model, looking into the cash flow, what we can see here that the cash flow from operations has been steadily growing in line with their earnings. And this is always something that I like to see, because this means that the accounting team is properly expending all the costs that they are making within the business. I always expect earnings to grow about as fast as cash flow from operations, and this is very much what we see here for Deutsche Telekom as well, so kudos for them. It's grown from 13.6 billion all the way to 32.2 billion here in 2021. Like I mentioned, when you compare this with KPN, who's been quite steady holding their cash flow of operations, Deutsche Telekom has been massively increasing it. But of course, with the increase in cash flow, they also see a very big increase in capital expenditure. And their capital expenditure has actually been growing faster than their cash flow from operation has, which means they are not more efficient in their business. And this is very much the big contrast with KPN, because KPN is a very established business and they have been able to reduce their costs drastically for the past 10 years and are able to establish more free cash flow because of that. But Deutsche Telekom is not in that same area. They're very much expanding, and because of their massive expansion roadmap, the costs are actually increasing drastically. So Deutsche Telekom is actually, I think, losing some margins here when it comes to their free cash flow, and this is also something that we'll have a look at later on. So again, I think this for me, again, it signals to me that Deutsche Telekom would have to solidify its position in the coming future. It will have to reduce their capital expenditure because it's eating away so much of their cash flow from operations. They have to make sure that their infrastructure is in place and so that they're able to reduce their costs here in the future. So looking at free cash flow, like I mentioned, we'd see a slightly increasing curve here, but it's really not that impressive. And we also see like some very low years, even like a negative year here in 2017 because of their massive expansion. So compared to KPN, I think this again highlights the growth story that is possible for Deutsche Telekom, and maybe also a little bit of the risk that comes with that. Additionally, because of their growth story, what we see with the shares outstanding as well is that they've been diluting their share count. So they have been selling shares on the open market as a way to raise additional funds for them to expand their infrastructure, to expand their business. So we can see here in 2012 they had 4.3 billion shares outstanding, and 10 years later down the line they added 500 million shares to the market and to a total number of 4.8 billion. Which is completely fine, by the way, especially if you're going for a massive growth push. I think it makes a lot of sense to actually start diluting shares so you can use that money from the stock market to invest into your business and to grow your business, which is very much what they have been doing, okay? I don't want to take that credit away from them. They have been growing like crazy, and therefore, I think the valuation of Deutsche Telekom is quite interesting right now, because the moment they can start to solidify their position and reduce their cost, I think we're going to be in a very good position holding Deutsche Telekom. So free cash flow per share, what we can see here on average is not really been changing all that much. In 2012 it was 1.2 euros. In 2021, which was an absolute record year for them, to be fair, it was €1.83. So looking at the price per share, there's not too much movement here because they are paying out a fair number in dividends, and because I think in addition to the growth, it also becomes more leverage, which makes it a bit more risky. Overall, we see that their price per share is quite stable around the, I think, say 14 to 16 euros range. Free cash flow yield has been relatively high, I think, also compared to, I think, their competitor of KPN. But we'll have a look at that in a little bit to compare the two businesses. But on average, I want to say they have about 10% free cash flow yield here. So that brings us to forecasting this business. Where do I think that Deutsche Telekom is going to be ending up 10 years from now? So looking at the EBITDA, we can see that their earnings have been steadily growing for the past 10 years. And I do think that the earnings will be decreasing in the future here. Now, on average, they've been growing 9.4% year over year, which are very impressive numbers, especially with the acquisition of Sprint here in 2020. It really did a massive boost for their numbers of 40%. Earnings growth in 1 year. But I'm going to say in the future, because I expect them to delever their position, I do expect them to reduce their growth story, especially with the rising interest rate environment that we're in right now. I think Deutsche Telekom will have to focus more on paying down that debt as they have to on expanding their growth. So I think that earnings are actually going to come down year over year. I'm going to give them a 7% yield here for the first 5 years, and afterwards I'm going to say it's going to be 6%. So I still expect them to grow, just not as much as they have been doing historically, because I do expect them to move some of their money into their checkings accounts to pay down that debt. Looking at a multiple, historically they've been trading at around the 4 to 5 times multiple, and because I want to be conservative, whenever I make a projection, I'm going to give them the lower end of that number, because if my lower end, my conservative number beats the stock market, that's the moment I'm going to be interested in holding this stock. So I'm going to give them a 4 times multiple, which gives me an enterprise value 10 years from now of 304 billion euros, to which we subtract the debt and add the cash, gives me a market cap of 180 billion. Divided by the amount of shares outstanding, gives me a share price 10 years from now of 37 euros and 31 cents. Now, they might just increase the share count here, but at the same time they will probably also decrease their debt level. So I decided not to tinker with either of them and just let the numbers be the way they are right now. Looking at free cash flow, and I think this is more of the shaky area, I think, when it comes to their projection, because their free cash flow has been relatively shaky in the past. So 1.2, sometimes very low single digits, even a negative year here as well, and the last year was an absolute record year. But what I'm going to do is I'm going to say, actually, I think 1.33 is probably a more accurate number for the future, because even though I do expect their free cash flow to be increasing as they are trying to reduce the cost of their business, they do need to use some of that money as well directly to buy back the debt. So I'm going to say the average number here of about 1.33 as seen here in 2020 and 2020 2019 and also quite close 2018. I think this number is more accurate than the record year here of €1.83. And I'm going to expect them to increase their free cash flow by 5% for the upcoming 5 years. Historically, they've been doing 5%, and I think they will probably be able to continue doing this for the upcoming year as they're trying to take down their cost level. Afterwards, I'm going to give them a 4% because I do expect their free cash flow increase to be coming down, but still quite close to the 5% level. So with a free cash flow yield, I want to give them a free cash flow yield of about 10, maybe 11%. I'm going to give them 10 because I wanted to give them the benefit of the doubt when it comes to that, because I already took a haircut from their free cash flow. I'm going to give them a 10% free cash flow yield, which gives me a stock price 10 years from now of €19.86. Now, when I look at the stock market right now at this very moment, I can buy as much shares of Deutsche Telekom as I want for €20.32. So it's come up quite a bit actually from their previous prices, and I think it's at an absolute record high at this very moment. And I think it has to do with the fact that people want to move away from growth stocks because of the increasing interest rate, because of the reduce of growth stories. People want to move towards more safer forms of cash flow generation, and I think a telecommunications company is a very safe form of cash flow because, like I said, people will continue to need their mobile subscriptions, continue to need their internet. Nowadays, people can't really do without that, so this is very sticky cash flow when it comes to that. Although I don't think people realize that the debt level that Deutsche Telekom has will influence their future returns because of the high interest rates, and Deutsche Telekom is relatively quite high leveraged, I think, compared to some counterparts maybe. So I think this is not taken into consideration with the stock price. I think it may be a bit high at this moment, but let's just see. If you take out two projections, so the enterprise value model as well as the free cash flow model, and I cut them in half, so I'm going to say 50% for both of them, it gives me a share price 10 years from now of €28.58. When we look simply at the price on the stock market, that gives me a compounding annual growth rate of 3.5% annually, which is really not that high a number. But of course, Deutsche Telekom is mostly a stock that you hold because you know that their cash flow is very sticky, because you know every single year they will be turning a profit, and part of that profit will be moving to you as the equity owner. So if we include the cash flow as well, I expect an internal rate of return of 12% year over year. In all fairness, right, I gave them a very conservative estimate where I reduced their earnings and I took a mid-level free cash flow to expand upon in the future, and also took a high yield and a low multiple. So these are very conservative estimates, and even with the conservative estimates, I think even at the current price, Deutsche Telekom will actually be a very interesting company for anyone who wants a steady stock in the future with a steady cash flow, and really just want a safe place to park their money in the upcoming years. Now, if you do actually not believe my assumptions here, and you actually believe that the free cash flow that they have here in 2021, the €1.83, is actually their starting point, which is a very fair argument to make, right? Because their free cash flow is very sticky. They have been able to increase their free cash flow after acquiring Sprint, so their free cash flow may very well be a lot higher than I'm actually giving them credit for here. So if you do believe that their free cash flow will be on the higher end of things, then this is the projection that I'll be giving Deutsche Telekom instead, which is a 5% increase annually on the stock market to the stock price appreciation, and a 16% internal rate of return for simply holding the stocks for 10 years and raking in all the free cash flow that they'll be generating. So if we take this number for cash flow, let's have a look here at what happens if the price goes up or comes down. So if the price comes down about 10%, I'm going to be very, very interested. An IRR of 18.4% for a stable company, like Deutsche Telekom, is a very, very attractive valuation. And even if the stock goes up a little bit, let's say 10%, maybe even 20%, I would still potentially be interested in buying this company. And just to give you an indication of what this looks like as well, when I give them the more conservative free cash flow yield, at that moment, the moment that the stock price goes up 10%, I'm not really interested anymore, to be fair. I think there's better places to put my money, and if it goes up by 20%, I'm definitely not interested in Deutsche Telekom. But even at the current valuation, and especially if it comes down a little bit back to those 18 euro numbers, I think Deutsche Telekom will be a very interesting and solid addition to any portfolio. Okay, so that was Deutsche Telekom. Thank you very much for watching. Don't forget to like, subscribe, and all that good stuff. And I'll see you in the next one. Cheerio!